Crypto markets consolidate off the highs as trade war uncertainty remains, keeping a lid on risk assets. Implied vol gets crushed as options market starts to price in some summer range trading. But put Skew catches a bid in the front expiries as traders hedge against further near-term weakness. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave from FRNT Financial. How's it going, man?
Very good. You well?
Very good. So, was it a false breakout we're getting all excited about last week?
I don't know. Do you know what? One thing that is like noticeable is again like how sour the mood is everywhere. Like we sat kind of comfortably above like what sort of 104k. In around those levels.
Crypto people want parabolic breakouts.
Yeah, it's just all or nothing.
Yeah.
Whereas I'm kind of like looking at it going, no, I think this is good. Like we have these little breakouts, you know, test some new highs, consolidate a bit lower, you know, and we just kind of power up again to take the next leg.
Yeah.
So if you listen to like crypto Twitter, it's like, oh shit, this is the end of the bull market. I'm like, God,
yeah, but exactly. Like if equity markets were trading like Bitcoin, everyone would be high-fiving and celebrating, right?
Yeah. I must admit, like, personally, I thought once we made new highs, I thought we'd rip to like 120k or something quite quickly. But we didn't. But I do think last week as well, it was month end. I always think month end, quarter ends are always like a funny little window. We've spoken before, it's like typically negative for liquidity because banks window dress balance sheets. In fact, like the RRP went up something like 126 billion or something last week, which is like cash coming out of the market. So it's negative liquidity. And then as you'll know, like people adjusting positions, rebalancing, all that stuff. So I think last week was a noisy week. I think typically then you get like a bit of a like liquidity and positioning hangover into like the first couple of days of the month, and then we start to crack on. But I still think everything like underlying this move looks pretty good. You know, we had the inflation data last week. I've been talking about this disinflationary kind of backdrop to everything still. That was really good. I mean, what core PCE, which the Fed like looking at 2.5%. I think that's the lowest since 2021.
But bond yields keep creeping back higher again, though, don't they? Yeah,
but I think part of that are these sort of debt sustainability fears sort of coming into it. Maybe a little bit of kind of re-rating growth as well with Trump kind of easing off on some of the harsher sort of tariffs.
Right.
And Bitcoin, interestingly, I think is oscillating between these, you know, this left and right tail that we've spoken about. Like, and really interesting, actually, Bitcoin at the moment seems quite positively correlated to yields, like positively. So yields going higher, Bitcoin goes higher, which normally it's normally the other way around. But again, that's because we've been trading this debt sustainability fear and like more towards the left tail where that US credibility is being called into question. And that's just settled down a little bit, I guess. Yields of, you know, 10-year yields pushed above that 450, 460 level a week or two ago.
The trade war stuff's interesting, right? Because like Trump obviously brought in the whole EU 50% tariffs. Then he's delayed them. Then he's come out and said China are, you know, not sticking to the deal that we've agreed, and it's just more and more noise. And then that US court tries to block the tariffs.
Yeah,
right.
Yes,
where we got this knee-jerk higher in risk assets on that, and then it gets faded because like, well, even if they block those specific Liberation Day tariffs, there's other ways the administration can put stuff through.
Yeah,
right. Trade barriers, trade restrictions of some kind. So it's like it's just I see it as bringing a load more uncertainty to the table, whereas we were in this world where. He ratcheted up the tariffs. He pretty much overplayed his hand. He realized he'd done that. He started to backtrack and it was all becoming a bit more friendly. And then suddenly they poked the bear and they've said, oh, we're just going to ban your ability to do any tariffs at all and screw up your whole agenda. And now he's like kind of retaliating to that dissent, as it were. And that just creates a shitload more uncertainty. So I think it's quite good for vol. I don't think it's so good for the market.
Yeah, I know I think we're seeing the Trump that we saw in his first term in office. It just feels the same. He makes a load of noise, puts some big threats, gets everyone to the table, agrees a deal, then he throws his toys out the pram because things aren't happening quick enough. And then again, it gets everyone back to the table to do a deal. And I think
he's given them a
seeing.
Wednesday. He said that I want your best offers by Wednesday this week.
Offers in by Wednesday.
What's that even?
Yeah, yeah. I just think, look, I was quite dismissive of the tariffs. Was completely caught out by the Liberation Day and the how extreme they were. But now they're kind of coming back to what I thought it might look like.
Yeah,
he just wants to do a deal. I'm still of the view. I mean, really interesting throughout all of this is sort of dollar CNH, sort of dollar China keeps coming lower. It just feels to me that there's been some sort of deal around, sort of back closed door deal around the dollar, because that is still the thing for me. A weaker dollar helps everyone out in this. Like with China, it allows, China still, I mean, we had more sort of weak data from China this week, with their sort of manufacturing PMIs back in contractionary territory. China need a weak dollar so they can stimulate, and they've been doing that. And that's so that they can kind of kick the consumer back into action. That then in turn helps increase demand for US exports and kind of helps reduce the deficit. It also stimulates global growth, which helps China's exports. It also helps the US exports. So I just think like a weaker dollar is just kind of helps everyone. And it's just interesting that we're seeing China do more stimulus, and yet the currency strengthening sort of more and more. And even like with some of these renewed headlines around the tariffs, dollar China still stays under pressure. So it just feels to me that that's maybe, we talk about Shanghai Accords and things like that. I think that's really interesting. But look, I think, like he did overplay his hand, and he wants to do a deal. And I just it just reminds me of last term in office. Like he'll throw his toys out the pram and do a deal, and not much changes. So meanwhile, I think we have to get back to looking at things like liquidity, look what the underlying macro is doing. And right now, I'd say it's pretty Goldilocks, disinflationary.
Goldilocks, where growth is robust and inflation is kind of trickling.
Yeah, not too hot, not too cold, right? Disinflationary. Like growth, I still think is slowing, and we have to be careful of that.
We've got the jobs data this Friday.
Jobs data this Friday.
How important is that?
It's important, right? It's the other part of the Fed's mandate. And it's obviously like the most lagging indicator as well. But right now, there's like, if you look at the jobless claims, like the more high frequency data, it still looks like a resilient labour market. So that's what I mean. We're in this sort of sweet spot. Inflation still remains tame. Again, the uncertainty to which you allude to is over tariffs is going to overhang that, because if tariffs do kick in, and then that's going to be short-term inflationary. Jobs market resilient. And all this in a market that, if you remember back in April, went like pretty much max underweight, it could. We were pricing COVID level sort of stress. Yeah. So I still think this market is massively underweight risk. When actually we got quite a sanguine sort of economic backdrop to this market. So I think everyone's going to have to re-risk, and as this month goes on, particularly into quarter end, everyone's going to kind of be trying to chase performance. So I think equities are going to do well. And I think then Bitcoin goes back to that right tail, where it's like the high beta risk on trade, and I think we'll sort of push new highs into the end of this quarter.
So let's talk a bit about Ethereum. Obviously, generally bullish crypto, bullish risk assets by the sounds of it. But Ethereum had its pop. It's kind of stabilized. But if you look at the Ethereum Bitcoin cross, it's showing some signs of life, right? Yeah. So that's quite optimistic. So it hasn't run away to the upside, but it's kind of popped its head above this downtrend that it's been in for ages, and it's stayed above that. So what are you thinking? Do we think in that risk on type move that you're describing, is it ETH you want to own really, not Bitcoin? Or
Yeah, God, that's this one come back to bite me, couldn't it? But I think so. Again, like having kind of been wrong on this for like the last year, just expecting that to take off. But we are I say global liquidity is picking up, and I've spoken about the weaker dollar is allowing this explosion of global liquidity, global M2, because other like particularly in emerging markets, they actually want to defend currency strength now, which actually means sort of buying up like dollars and essentially you're printing money and boosting your FX reserves, which increases money supply. So the liquidity-driven moves tend to favour the alt space, which is why we all get excited about, you know, our friend Raoul Powell's banana season, all that stuff.
Yeah.
So I think I still feel that because of the liquidity sort of story, I still think we're going to have a decent alt season over the next sort of few months.
Okay.
And again, that's been wrong, right? Bitcoin dominance has driven everything.
Yeah.
I think what's particularly interesting for ETH is the narrative shift around it. And particularly now, obviously, Michael Saylor and strategy was massive for, you know, this Bitcoin treasury idea, and that we've seen others come into. And now we're starting to see it with ETH. So I don't know if you saw Joe Lubin is going to be basically running a Michael Saylor strategy and building an ETH treasury. So we're now starting to see people look at that and focus around that again, which is a complete like shift in narrative. Narratives mean everything. Yeah. So it definitely feels like everyone was hating on ETH, right?
Yeah, for sure.
And people talk about Solana and Sui and everything else. And I mean, maybe the Pectra upgrade has helped as well, but it definitely feels like sentiment is starting to shift.
Yeah, I was looking at the options this morning, and there is definitely a slight premium for ETH call skew above Bitcoin call skew.
Right.
So generally, like over the last week, vols got smashed everywhere. Bitcoin vols got smashed more than ETH vols did, and then on top of that, Bitcoin upside like 6 months out got compressed as well. Like that's been holding quite big. You know how I've been saying it's like almost like a regime indicator when you've got persistent long dated skew in call premium and it just stays there whatever the front end's doing. It's saying we're still in that bull market regime, right? But the Bitcoin call premium is starting to get squeezed out. It's very small now. It's only about 1 vol call premium.
How far out?
Out a year.
Okay, right.
But the ETH call premium is actually persistently higher than Bitcoin now, right? Which is interesting, right? Because basically saying people are like thinking there's that upside tail risk in Ethereum more than it is in Bitcoin, right? So they're starting to believe that, yeah, this turn in ETH might have some legs, but again, they're parking that call premium in sort of September, December expiries for the most part.
Yeah.
Right.
Which makes sense. And I still think we get like this. I mean, this Bitcoin dominance has run for so long now, but I still think you start to get that rotation, just that rebalancing into other alts. And certainly from an institutional story, ETH is still the next one, right? ETH is still going to be the next play.
Instos aren't going to touch anything else, are they?
No.
Yeah.
I mean, and it's still the chain that the big instos are building on.
Yeah.
And
the stable coins all trade on it as well, right?
Exactly, right. And so I think it's something like 80% of stablecoin transactions are on the ETH network. It's still very dominant given how beat up it's been and how pessimistic everyone's been. I just think those things are changing. And I think the options market might be telling us something quite interesting. Yeah,
speaking of the options market, so this week I got to catch up with Tony Saliba, founder and CEO at Liquid Mercury. Those guys are doing some very interesting stuff in the options space. Have a look at what he had to say. Hey everyone, we are back, and today's special guest is Tony Saliba, CEO and founder of Liquid Mercury. How you doing, man?
Great, Imran. Good to see you. How are you?
Yeah, I'm awesome. I'm really excited about this conversation. You guys are big in the crypto option space, providing infrastructure for all those pro traders who have been coming over from TradFi, like myself, to trade crypto options. So why don't you, before we jump into exactly what you guys are offering at Liquid Mercury, why don't we talk a bit about your background in finance, how you've kind of built up your career over the years?
Well, I spent the first 15 years on the floor of the CBOE. I was a market maker, standing in the pits, helped them get started in the S&P 500 options, which was a failed American-style option, and myself and a few others went in and we relaunched European style, and SPX is now one of the most popular products that they have. And I did that through 91, but early on in '84, I wrote my first program to help me keep track of my positions. Because as a market maker, you would take on whatever the public was buying and selling. And my style of trading was very low risk. I would turn everything into spreads. So I had very large inventory that I had to keep track of. And that's how I got involved in technology, and pretty much spent the late 80s through the late 90s traveling overseas to help the institutions launch the electronic options exchanges. I was there when DTB launched, Deutsche Terminbörse, which is now Eurex. I was there for ERTAB, the Austrian market in Vienna a year later, then in Madrid and Milan. I actually had residences from Stockholm down to Milan, and was on board with those exchanges to help A, train up market makers, B, use technology to help them manage risk and execution, all the way down to Sydney when we launched I was the last guy to turn out the lights on the Sydney options floor when we went fully electronic. I lived down there for 2 years to help them out. It was really great. I met like 8 to 10,000 young men and women and administrators and traders from about 20 different countries.
You must know everyone. You must know everyone
great.
in the options market, basically.
I'm 1 degree of separation from your mates when you were at Citibank or BAML, for sure.
Wow, that's cool. So you've seen the entire evolution of the options market, basically, right? From like so long ago. Wow. Yeah, because I only started trading in 2001. So I've been in it for over 20 years, but God, you've done more than double my time. So that's awesome. All right. So now let's talk a little bit about crypto then. So, you decided to kind of take your skills and what you've learned in TradFi and what you've built in TradFi and bring that over to crypto. And my God, I'm sure crypto needs it, right?
Well, so I sold one of my companies to ConvergeX, and in 2009, we had a head of research, is a great guy, Nick Colas, and he would write a morning email, which I read religiously just because he was a smart guy and interesting. And he started writing about a new technology called Bitcoin. And so from late 2009 to early 2010, I learned everything I needed to know about crypto and chucked it and went back to options until about 2017, when I was having breakfast and somebody said, "Hey, did you see the Bitcoin traded 2,000?" I'm like, wait a minute, that was like 50 cents when I last read about it in 2010. So I missed that whole move. And then
we all missed it, man.
Yeah. And so I decided that I would that we needed to bring the things that we did for listed options. I mean, Liquid Point was the first company to show all of the U.S. options exchanges on one screen, so you could trade the BBO or the NBBO, best bid and offer. And we started building out tools, which our predominance was for agents, for sell-side shops. The old shop of Merrill was one of our biggest customers, Lehman, Bear Stearns. All those teams used Liquid Point's workflow automation. So we built that out for crypto, but we were clearly early in that. From early 2018 when we launched, even till today, there's very, very few of the TradFi agencies that have embraced crypto, but it's loosening up now that we have a new administration.
Yeah, exactly. There were too many hurdles, too many regulatory barriers that were stopping them coming in, right?
Yeah, we had a regulatory boot on our necks for 4 years plus. And now the normalization of being able to trade digital assets has sparked a lot of these traditional banks here in the U.S. to start servicing with crypto desks or digital asset desks.
Yeah, and we're seeing, with the whole Coinbase Deribit thing, right? That's massive, and that's clearly, a large US institution now coming in and saying, I want to be the player in the option space and open up this entire market to the US retail option space, right?
Absolutely. Absolutely. Well, it was just a matter of time, and the US options markets are going to have to hustle to retool to be able to keep up. I mean, the adoption in the ETFs has been, as expected, very robust. But those are ETFs, and there's, a dozen to 2 dozen leading tokens, coins that are worth trading on the U.S. market, and more will come, and more will, that marketplace will grow. But just the top 2 or 3 with Bitcoin and Ethereum, each exchange is missing great revenue opportunities and not being trading those options.
Yeah, and I guess, with this move and with the regulatory changes and more banks stepping in and offering and providing liquidity in this stuff, it kind of opens up the door for more exchanges to come online, right? Like you were saying, like in the S&P, for example, how many options exchanges are there in the US who trade options, right? There's like 20 nearly, right?
Yes, 19. Yep. And probably will go over 20. Well, the exchange business is very, very good. So what happens too, there's a knock-on effect of the competition. Each new exchange that is launched creates a volume increase because those native players at that exchange are now being arbed or arbing. And it's really just a expansion and deepening of liquidity, which is really good for the customers. It's the rich tapestry of the U.S. Listed options marketplace.
So let's talk a bit about your firm. So the one that you've set up in crypto now, so Liquid Mercury. So who would you say are your sort of biggest competitors? Because as I understand how your business works, like Paradigm, for example, would be one, right? Because you are offering that one centralized place where people can go and source liquidity in the options market, right? But who else are your competitors?
So in that regard, it's Paradigm. In regard of trading tools, it would be Talos. And regarding routing, it would be like CoinRoutes. Okay, so we do all of that. We have a lot more trading tools too, because none of them really cater to the agent. You can take orders, inbound orders from a number of different sources, stage them, slice and dice them, route them to various exchanges, put them back together, post-trade allocation to different accounts. We've taken everything we did in TradFi and rebuilt it. It's our 4th generation of technology.
So if a bank wants to get involved and start providing liquidity in crypto options, rather than building all their in-house tech and infrastructure, they just go to you, and you've done it all for them already. Basically.
Push button, one-stop shop will do any customization they need, look and feel if that's the case, or connectivity to their reporting systems, whatever custody agents they prefer.
And have you got the big banks signing up for that now?
Yes. Well, so we have a handful of banks that are finally kicking the tires and saying it. I mean, the recognizable names, and the real focus though has been for us on real world assets, which there's a lot of capital chasing the liquidity, if you will, in assets like real estate, student loans we have that we're onboarding.
So explain that to me a little bit, right? So rather than just providing infrastructure for people to trade options on Bitcoin and Ethereum like they can do on Deribit, for example. Yes. So instead of just pooling together all the liquidity providers that are out there and showing that on your system to make it easy for someone to manage that and see all that and access that liquidity, you are actually taking real world assets like student loans, like what else? Like wine and stuff like that.
Investment grade wine. We have, this is huge and should be very interesting. ISAs, income sharing agreements. We launch next quarter with a Chicago-based company called Gigastar. This was their idea, but they chose us for the secondary market. It's a great idea. They're connected into all the major social media outlets, and they tokenize future revenues of content providers. So YouTubers, TikTok phenoms, influencers in general. It's brilliant because each of them have built-in subscriber audiences. And for instance, for your client base or your subscriber base, they take a bet on how much money you're going to make. You take a bet on how much you want to share of that. They raise capital for you. You take a piece of that forward earnings now. They get the token. You've agreed how long and how much you want to share. And as your career takes off as an influencer, those tokens participate in that way. And your audience who loves you invests in you and is rewarded. And they'll be trading that on our platform. This is one step away from being able to trade options on those tokens. That'll be next year.
So who are the liquidity who are the market makers who are going to basically make a price on some random Imran options insight token? Like, how would that work?
Well, okay, so a lot of this is automated. So we build market making bots, if you will, and somebody with capital can set. It's nowhere near as difficult. It's difficult for different reasons, but it's nowhere near as difficult as what you were doing or I was doing in trading equity options. Okay, because first of all, there's no stock lending yet in these things, and their sellers are only going to be those who own it. So you're not up against these whales that we were talking about that might run you down. So the initial liquidity, there's a handful of, I would say, mid-tier market makers that set up these bots, put some capital to work. The markets are nowhere near as tight or won't be as tight as what we are used to. But once this picks up in, in its size and popularity, then I think the big shops will say, okay, well, we'll dedicate some resources to this.
I mean, it sounds super interesting to me. Like the fact that you're going to have tradable tokens on all of these all of these different things is kind of amazing, right? I mean, the thought of trading options on them though, that is unbelievable if we can actually get there, right?
Well, just like in the U.S. stock market, there's like 250,000 names and only maybe 200 have, a nice active flow. A lot of these real world assets will just trade in the underlying, but we have ideas on how to aggregate and create indexes and things like that. We're talking to the index providers, but also Liquid Mercury provides liquidity as a service too, with our bots and our capital to help these real world asset.
You're becoming one of the market makers yourself as well.
Just in the real world assets, just to help get them launched.
Okay.
So we have a couple really exciting, and as I was talking about earlier, we have not prospected for any of these, and these have been inbounds, mostly companies that have a good idea, they have a decent audience for this, and they need the technology, and rather than try to build it themselves. See, going to, an ATS, not all of these products are regulated. A lot of these are commodities or assets that don't need to be traded on an ATS. If it does need to be traded on an ATS, like if it's
does ATS stand for?
Alternative Trading System. So they're regulated in the U.S. and the income sharing agreements do. Okay, they need to be. But like consumer electronics, we launched this week actually. We get the inbound from the big box stores, and we've put together what they call break fix guys. They're refurbished teams that are scattered all around the U.S., and we've strung them together with our technology to address this massive amount of unopened return goods that Amazon and COVID spawned in the US and probably in the UK. Everybody orders 2 or 3 of everything and then returns, 1 or 2.
Wow.
So those are going to be on the platform in the next few weeks. Another
What
interesting.
do you think the biggest market is going to be then for real world asset type, alternative type assets? Do you have any inkling which stuff is going to be the stuff that really takes off?
Well, so we are working with a shop called Minera, and they have the rights to what they're claiming America's largest in situ gold and rare earth repository in Idaho in the Portuguese Creek mine. That can be huge because they have some, I want to say 17 or 1.7 billion ounces of, I'm getting my decimals off, of gold in situ. And so these will be precious metals that'll trade in a tokenized sense. Okay. We've been approached by companies that have classic car collections. They want to tokenize these and get liquidity for them. Intellectual property rights. One of the large music studios, we have an MOU with one of the large music studios, worldwide name, this is their idea. We just provide the technology to tokenize musicians' future revenue stream with a social media twist to it. And they're just really unfolding it to us now. But, you would get to meet your favorite artists or go to concerts based on owning these tokens, along with sharing in their revenues. So income sharing agreements can be huge.
Wow. That's interesting, isn't it? And I guess it's almost like providing an alternative to the meme coin space, right? Because the meme coin space is a little bit like that, right? It's little communities are building around these memes, right? But what you then do is you say, okay, no, I've got these influencers with massive followings, and actually, rather than it just being a meme that you're buying and speculating on, you actually get a share in the income that this influencer that you believe in is going to generate. That's way more attractive to own than a meme coin, right?
Well, it had to start with the fake stuff first to get to the real stuff. I mean, those are like collecting, baseball cards or comic books or whatever. This is, for instance, sports investing is also going to be huge. One of our clients, Champion Venture Partners, they launched their internal marketplace last month using our technology, and then they're going to take it to the public. And this is everything from ownership in soccer clubs, soccer teams, baseball, minor league teams. They may even go with, maybe get into professional sports, but also seat license agreements. Do you know what NIL is? Name, image, and likeness. It's the biggest thing in college sports, where a college athlete is guaranteed a percentage of money that the school makes off of their name and likeness.
Okay.
And this group wants to tokenize those and put it up there for fair trading. And I think that's going to be huge. There will be options on the sports stuff at some point.
Interesting. Right. And are there a lot of regulatory hurdles to get this stuff off on the road, to actually, get to where you think this is going to end up?
Any of the ones that you're sharing incomes with somebody, there's regulatory, because you're actually investing in someone as opposed to buying investment grade wine or somebody's student loan. You're purchasing it from them. But as we bundle these into indexes, yes, we will have. Now, when you say hurdles, there's boxes to check. And I think this administration, which, took the boot off our neck, so to speak, from what we lived through the last 4 years. I think they're going to make it a lot smoother and easier and more common sense protections for the individual investor.
Yeah, hope so. Hope so. I mean, like, to be honest, some of the shenanigans that they did with the Trump coin and stuff like that. I mean, let's be clear. Who are they to start telling people what they can and can't do when they're getting away with that kind of nonsense, right?
Yeah, bad actors in that regard, rug pull, if you will, or using.
Yeah, but you know what the beauty of this kind of income sharing agreement stuff is, right? Is that there's no incentive to rug pull anyone, because your entire income generation forward is based on you continuing to build your following and maintain your credibility. So if people buy your token, all the incentives are aligned. You've got no incentive to rug pull, right?
Absolutely. That's 100% the fact. And, like I said, it wasn't my idea. It was a great idea. The Gigastar guys here in Chicago created all this, and they've already raised, over $10 million for content providers. So they got a little taste of their future. And then those token holders, which they're Reg D or I think the Reg D securities, will trade. They own the ATS, our rails, our front end, our matching engine and everything. That'll trade freely. And like you said, there's no rug pull available. That's actually, unless if I'm a podcaster, you're a podcaster and you're going like this in your popularity versus I'm a podcaster and I'm losing popularity, it's going to reflect itself in the price of the token. But your audience loves you, so they will support and participate. It's a natural. I mean, I'm very, very excited for them, and I can't wait to actually get started. And the same corollary, Imran, for sports, for young athletes, absolutely.
Yeah. It's a whole new way of accessing capital for content creators, for entrepreneurs who basically are on a mission and they're building communities and they can connect with their audiences. It's another way for them to get support from that community to continue with that mission, basically, right?
Absolutely. And I bet you there's people at Deribit and or Coinbase that are already tracking this, as these travel through their stages to mature. And at some point they're going to go, all right, we want to list those tokens or that set of tokens and list options on them.
So at the moment, if I come onto your platform, like, how many of these funky real world alternative assets are available to actually trade? Is this still like coming soon, or is it actually there and tradable right now?
So, well, the sports stuff is tradable, but it's a closed market for Champion Venture partners. They want to expand into the public market to make it available to people beyond their membership in the next month or so. Student loans, we're actually tokenizing the loans right now as we speak, and that marketplace will probably be available before the end of the month also. Annex, which is one of our clients that is doing the consumer electronics. I mean, this is massive. Last year, over $120 billion of consumer electronics were returned, okay? And the vast majority of these are unopened. So this marketplace, which it's perfect during a time of a recession where people don't need to buy the newest and greatest, and they go to the refurb market. And that's going to be up and running before the end of July. The music one might take a little bit longer. The wine token is already trading, but they haven't launched our platform yet. So our guys are busy putting the finishing touches on these. And
then when do you see options on these funky things being like, is it a 5-10 year thing? Is it?
No, I would say 1 year. Okay. So one or more of these are going to be robust enough to be the underlying for options trading.
Yeah.
so I was, involved in I was on the board of the CBOE, and one of the biggest areas of the exchange was trying to find new products, right? Trying to find what is the next great tradable thing. So these they call them 0-day options, are really
There it is.
daily,
Yeah.
right? Daily expiries. But same stuff you and I traded, only shortened time frame.
But even I trade it now. The fact that product has become 50% of the market, everyone's trading it now because it's having so much impact on the market that if you don't trade it, you're like, what am I doing?
Right, exactly. So I would say that one or more of the exchanges, probably Deribit would be one of the leaders on that, would embrace the first real world asset. Well, we're very close with one of the largest real estate funds to tokenize their fund, and they've combined it with a cryptocurrency, so it's got a really great return profile. This is the kind of thing that an U.S. options exchange would embrace to list an option on.
Interesting. Tony, this is exciting stuff. You've given us an amazing insight into like the future of this, where we're headed, right, in terms of crypto and the access it gives to people to invest in alternative type products. It's really cool. Really.
They can go to our website, and we have a special portal for all the real world asset companies that are using our technology. We have a token called the Merc, 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 trades on Uniswap right now, but that at some point in each of these marketplaces will have the ability to you can trade between them using our token, meaning you get a discount on the various products that are trading on the other platforms.
Oh wow, nice.
That's at liquidmercury.com. So and we answer all the questions personally. It's exciting. It's am
I going to be trading vol on Options Insights token one day? Because that's going to be
good. Hey, we should talk about that. Depending how big your class sizes are, and your
I'm probably not quite there yet. I'm probably not ready to launch one yet, but you never know.
You should plan early. But there's so much. There was a report last week or the week before, a record amount of cash sitting on the sidelines in money market funds. Never been this high. So,
Tony, when someone's buying Fartcoin, when that much money is going into Fartcoin,
right?
It's very clear there's enough money sloshing around, right?
I mean, it's crazy, but I mean, Doge still has a multi-billion-dollar market cap, right?
Yeah, I mean, I do struggle to get my head around that, to be honest, but it is what it is. There's a lot, but actually, no. You know what? When I say I struggle to get my head around, that's probably not true. It just highlights that the value of money has just diminished so much, right? With the printing that has been done by all these governments, there's just too much paper money around, right? And it's finding its way into these things that are representative of memes and attention and communities, and it's finding its way. But the actual, you can't really think of money like money anymore, right? It's messed up. Like me and you work our asses off to make whatever it is to pay our bills. But when people can create trillions at the touch of a button, what does money?
Also, it gives people hope that it's gonna, price improve to, it's a speculation, a massive opportunity to double or triple. Some for no reason, some for good reason. I mean, there's new. I ask everybody this: what year did you get your first email address?
Oh God, I can't remember. It's a good question. Well, it must have been when I was an adult. So
okay, yeah.
So what would that be? That'd be like probably just before 2000, maybe.
Okay. Yeah. So most depending on people's ages, I mean, the younger the person is, then it's like, well, I don't remember because I was too young. I got it when I was 8 or 9. But the internet's been around since the late 60s, and most people didn't really know about it until 95, 96, when Andreessen brought out Netscape. Okay. And all of a sudden, those of us who were doing listserv, bulletin board things, we got our first email address in 1990, and people said, what is it? Who else has it? I said, well, I travel all over the world and I can at least communicate with my staff. So 5 or 6 years later, we started seeing other people at our banks and clients get email addresses and welcome to the party. Well, similar thing with digital assets, where 3, 4, 4 years ago, it would have cost like 6 figures to create a smart contract for a utility token. Now it's, $1,000, a couple $1,000 at the most to do that. So things are more efficient. They're more price, cost effective and ubiquitous. So there's this embracing of it, and people say, well, hey, I have sock drawer money. Okay. I'm going to put it in Doge because maybe it goes up, a few cents, and I, can make a better return than if I put it in the stock market, for instance. But people are, now coming to the realization that digital assets, which are 15 years old, are here to stay.
It's so funny though, because you would have thought now everyone would finally have accepted that, right? I was literally having a conversation the other day in the gym with a guy who's not stupid, a guy who used to trade at a bank. He wasn't an options trader like me, but he was a cash trader. And he still thinks it's all a scam. He still thinks crypto is all a complete scam and a Ponzi, and he doesn't get it, and he doesn't want to get it. He doesn't want to open his mind to the idea that this might actually be real. And I actually think some people have that view because they feel, maybe it's subconscious, but they've missed the boat. They feel like, because I didn't get involved and now it's so massive, I want to hold on to the hope or the feeling that it's still all a scam, because then I haven't been the mug who missed it, basically. Right?
I know people like that.
Yeah.
People close to me who say it's a bubble, it's a scam, it's going away.
About the price, like when we talk about crypto for the most part on this show, yes, we talk about where it's going price wise and stuff because we like to punt options and speculate or whatever it is. But more often than not, what we're talking about is what's being built in the space, like the infrastructure that's being built, right? What it's enabling people to do, right? And we've talked about that a lot today, right? All these real world asset tokenization things that just give access to all these investments that weren't there before. That's the exciting part. And that's why this stuff isn't a scam, because it's sucking brain power out of an industry that's been in secular decline since 2008. And it's sucking those smart people into this industry who are like excited about the growth prospects. They want to collaborate with other people. They want to build things. Being an entrepreneur, I know what it feels like to build something, right? It's a lot more fun, right, than being at a bank and watching banking revenues declining, watching people getting fired every year, and you're just like waiting for it to be you, basically, right? It's a horrible place to be. That's not what crypto feels like. Crypto, we were a token in Dubai recently, right? Crypto feels different. It feels like everyone's here to grow, everyone's here to build, everyone's here to work together. And finally, the government, like you said, has taken their boot off our necks, and now we're free to really go for it. Right?
Absolutely. And it's happening. There's so many billions being invested in the infrastructure. Look at all the different states that have their own initiatives. It just makes sense. One other corollary or analogy is the fax machine, right? Everybody had to have a fax machine back in the day, if you were in business, and very few companies have fax machines in use today. Well, the data management, the data handling that is being done today on flat files and legacy technology is being upgraded and will be upgraded to tokenizing the important assets, the important information, so that it's easier to use, it's smarter, and much more efficient. The savings in legal and admin and collections and all the different things that go along with having the right type of technology. It's like throw out the fax machine, bring in the internet. Now the internet is graduated to where digital assets, cryptocurrency can help you move your wealth around properly, quickly, and we're reaching like a singularity of liquidity. It's some time off, but this is the path we're on.
And another interesting thing as well is like how AI connects to this whole ecosystem, right? Because you can create like AI agents now that will just go and start trading crypto and generating money out of thin air, basically, right? And it's like that's kind of a whole new world and rabbit hole like that we could go down. But it's just it's
well, we use it for our clients get to program what they want in our algos. They're agentic, AI driven, but internally we do more with less people, more effectively. We can create reports or proposals, legal documents quickly, cheaply. It has a knock-on effect in the company where, everybody's more efficient. And I always say, I've been saying this for 2 or 3 years to my staff, AI is not going to take your job, but somebody who masters AI just might. So, better learn how to use the tools that are available. Or
it's augmenting your skills. And if you're going to ignore it and you're not going to learn how to use it and boost your productivity, it's giving you the ability to, it's giving you the ability to have like 6 hands instead of 2, right? And if you're choosing not to have those extra 4 hands, more fool you, right?
Yeah, that's right. Absolutely.
Yeah. Tony, it's been an absolute pleasure to speak with you.
My pleasure. I love your podcast, and I love what Deribit's doing too.
Yeah, great. All right, man. Well, I'll speak to you again soon, hopefully. And thanks for telling us all about Liquid Mercury, and we'll catch you on the show sometime in future. Cheers.
Appreciate it. See you soon. Take care.
Okay, yeah. So Tony, I mean, he's an old boy in the market. He's been around a while, hasn't he?
I'm sure he'll appreciate you saying that. That's really interesting. Like, I just think the whole world's going to be tokenized, right?
Yeah, it does sound like we're heading that way.
Yeah. And it's interesting, again, just seeing the tools being built to allow it to happen.
I'm excited about an options insight token.
An options insight.
Well, actually, yeah, token. I'm more excited about the options on the options insight token. Wonder what my vol would trade at.
I don't know. Well, with your income streams, it'll be pretty big, I imagine.
We'll see about that.
Yeah, but no, it's it's funny because like when from the TradFi world, and we think like securitization, the ability to securitize assets was for a very, usually for corporates, but there's been a few stars and stuff who have been able to securitize their income streams, like artists and that have done it. But for the sort of barriers to doing that and the frictions to doing that are massive. And the idea again with crypto and stuff and through tokenization should break that down.
You know what I think? I think it's the death of the meme coin space, right? Because at the minute, like the meme coin thing is all about, getting attention, right? And it's like, it's a joke. Like a meme is like a joke. Yeah. And it gets people's attention and it forms a community around this kind of joke coin, basically. Okay, or this token, right? And for some reason, that's attracting a load of capital and creating, these cycles within meme coins, right? But like, if I'm a crypto investor who's happy to speculate on these random assets, these new assets, right? Am I more likely to buy Fartcoin, where I have no idea what the hell that thing should be worth because there's no intrinsic value to it, right? Or am I going to buy a Taylor Swift token or some influencer who has been around for decades, has got millions of followers, is continuing to generate revenue and make money and get bigger and bigger and bigger? Am I not going to rather own that token than a random meme that might not be popular in a year, right?
Yeah, and again, I think it's just going to be different types of investors, right? That are going to sort of play about in this stuff. And it's like with NFTs, it's the same thing, right? So,
yeah, but it's hard to assign my point is that it's hard to assign value to NFTs and meme coins, right? Because they don't generate income, right?
Yeah.
Right. It's like why Warren Buffett doesn't buy gold, right?
Yeah,
It's a pet rock. It doesn't generate income, right? But these artists, these icons with millions of followers, they make money.
Yeah,
and if you own a share of what they make in the future, you will make money. Yeah? So there's an intrinsic value you can assign to them. And on top of that, their incentives are aligned with yours. They are incentivized to do things that will make them more money, which will make you more money as an owner of their token, right?
Yeah.
But with this whole meme coin rubbish, there's all these rug pulls going on left, right, and center. I don't really know how they work. But the point is, clearly, the incentives are not aligned, right?
Yeah, no, 100%. And like all of it, whether it's meme coins and whether it's tokenizing, assets and income streams of a celebrity, and a lot of it is centered around community. I just think they're just very different communities is kind of how I see it. And in the same way that, I've not messed around in the meme coin space too much, other than just a few little, the degen inside of me sometimes wants to, just take a little bit of a punt. But again, like that's why I look at like layer ones and stuff like ETH and Solana and Sui, where, they've got real network value. And you can kind of try and think about how you'd value that. Whereas a meme coin, like you say, it's all about attention, and there's no intrinsic value really to it.
And I think that attention is too fleeting with meme
and
coins.
it is fleeting,
Whereas I don't think the attention on these influencers is going to be as fleeting.
No, but again, they're it's very like when you've got real income streams backing up some of these things. It's a very different, almost like very different asset altogether. But I mean, it's super exciting, and I love what like guys like Tony that are building, because again, it's like we've all been talking about this stuff for years, and again, it's like, with crypto, you go, there's all these things that we can do and achieve. Someone's got to build the bloody technology to enable it. So it's great when we see people like these guys actually building that tech.
Yeah, and he's got such a great track record of building tech in TradFi.
Yeah.
So the fact that crypto is able to attract that kind of talent to build infrastructure for crypto, that's what gives you confidence in the whole space just going the right way.
And it's a bit like we had Pedro on last week, right? And who I liked what he said. When you've worked in TradFi, you've kind of seen what works, and this is a chance to rebuild that, but just better and in more efficient ways. So it's super exciting. I enjoyed that, mate.
Cool. All right, guys, we'll call it a day for this episode. Remember to like and subscribe, and we'll catch you again next week. Cheers.